Hi, this is Paul Slack. It's Good News Planet. I'm speaking to Michael Copley. Hi, Michael. How are you?
How are you? Good, Paul. How are you this morning?
Okay, you're Executive Vice President of Retail Money Out Products at TD Bank. We've done a couple other stories on TD Bank, and so today we're going to talk about, this is a very serious subject because I think this in most cases everybody's biggest asset, how to avoid first-time home buyer's remorse. A financial expert, that's you, Michael, provides 5 steps to consider when buying a home for the first time, okay? People are freak out when they buy a home, don't they? A little?
Well, I think it's an emotional process for most people because it is, to your earlier point, Paul, it's the biggest financial investment most people make in the United States. And you know, the things that we're trying to do here at TD are to simplify the process for any prospective homeowner to ensure that the process that they go through is simple, easy, and convenient for them. So what we have our own website for first-time home buyers specifically to achieve that purpose, and the website's address is www.tdbank.com/firsthome. And there's other ways for customers to get to us to have this conversation over this very, very important subject, and they can certainly take advantage of any of our 1,300 stores by just walking on in and coming to see us and sitting down with one of our mortgage experts to have that conversation. Or they can simply call us at 1-800-937-5020 to have that same discussion in the comfort of their own home, so or apartment or wherever they might be. So we have made it as simple and as convenient as possible for customers to get to us so that we can have that conversation, all with a mind toward achieving the first objective, which is to ensure people are properly prepared and educated. Because being properly educated and prepared will give better trust and confidence in the customer's mind that they are asking the right questions, and that they have a better understanding of what the expectations of the process are for them and how they can fit into it to achieve the ultimate objective of buying a home.
Well, since I've been in TD Bank, I know you have lots of good documents for lots of aspects of a person's financial life and how to deal with it, which is wonderful, simple stuff, and I see it on your website as well. So let's talk about the 5 steps to consider when buying a home for the first time. Well, what should somebody consider?
Yeah, of course, going back to the first point, get educated and be prepared, because I think that's the most important element of the journey. And one element that's extremely important is for someone to understand their credit rating, because any mortgage provider is going to research the credit history and repayment ability of customers with other creditors over time, and every consumer has the right to get one free credit report a year from one of the 3 agencies that provide that information. And when they understand that, that will help for them to determine whether they're in a position to buy a home or not, number one. Number 2, to really begin to understand how to interpret what's on that credit rating and credit bureau report. And we can help in that regard by responding to questions that customers might have as to how to interpret the information. And then thirdly, we can take them through a process that results in the other 4 steps being taken to achieve the dream of home ownership. So getting prepared, number 1. Number 2, determine how much you can afford. And I think this is really a partnership conversation here with the customer, because the most important element of the mortgage is for the customer to know that they have the ability to repay, as it is for the mortgage provider. And once that is determined, that puts the customer in a really good position to go to a real estate professional and have that real estate agent professional try to find them the home of their dreams. Along that path to affordability, one of the elements that creates more trust and confidence in the entire process for all involved is the customer going through a pre-qualification or a pre-approval process. So all the surprise is taken out of the process from a qualification perspective when that customer goes to speak to a real estate agent about buying a home. From the consumer side of that equation, having a pre-approval in their hand gives them the empowerment to say, yes, I can qualify for a mortgage, and this is how much I can qualify for. And then from a real estate agent perspective, the real estate agent sees a serious buyer who has taken the first 2 steps to home ownership to understand the process and understand it well enough to know that you have to have a mortgage, and to have a pre-approval in your hand says to the realtor, it's time for me to help you select the right home and the right environment for you and your family to achieve the objectives that the customer wants out of home ownership. The third element of that is when you're hunting for that right home, that's the real estate agent's side of the equation, in that they have to have a serious discussion with the borrower as it relates to what they want out of the area that they care to live in, what schools they want to send their children to at the right time, if there's even in that plan part of that process. How long they intend to live in house number 1, and do they have a dream of moving up over a period of time, or do they want to settle their roots where they are, and things like that. And that's the realtor's responsibility. Number 4, choosing the right mortgage. This goes back to that financial partnership relationship that's created with the mortgage provider and the customer, such that the mortgage provider understands what the customer's long-term view of their life is, as a practical matter, because it could impact the choice of mortgage product that they choose. The example that I'll use is if someone wants to live in the area that they're looking to buy that home in for the next 30 years of their life, they want to settle their root, they want to set their roots there, their family's there, their support group is there, then they're going to be perfect candidates for a fixed rate loan. Whether that be a 30-year term or a 15-year term, a fixed payment loan is going to be the choice for them. One of the things here at TD that we've seen and we're taking advantage of is that consumers want shorter-term mortgages, and we've been able to provide a 15-year fixed-rate product that saves a minimum of $100,000 over the course of that 15 years, where they're not having to pay through a 30-year term. They just pay 15 years, and the savings from an interest perspective is pretty substantial when you shorten that term down to 15 years. Other considerations for the mortgage would be if the customer is not going to live in that area for an extended period, or they might be working for an employer who anticipates that individual moving to another city in 3 or 5 years, depending upon their upward mobility. That customer might choose an adjustable rate mortgage because it's a shorter term view of the mortgage's life, given that they're not going to live there, say, more than 5 years. And that can increase their affordability, which the customer can then choose to buy more home or simply put that money in the savings and just be more financially responsible along the way. So that's very, very important relationship as it relates to those pieces coming together. And then the fifth and last one is really closing the loan and moving in and understanding what indeed goes on at closing, who's going to be there, who's responsible for what, and being in a position to ask the right questions around the documents that have been provided before you sign them so that you understand them. And despite the fact that there's regulatory requirement around all aspects of a closing process, here at TD, we try to make it as simple as possible for people by not providing complicated products, number one, not providing convoluted pricing, number two, and not putting customers through a complex process that has them shaking their heads at the end, all with a mind towards ensuring that we are living up to our brand to be America's most convenient bank.
Right. Well, God darn, you know your stuff here, Michael, which is wonderful. And let's talk. I mean, today we're in August 5th, 2011. In essence, a good time to buy because, in essence, you can get some good buys on homes where, a few years ago the prices for those homes were significantly higher in most cases, I guess. And two, I think rates are kind of low, like today, right? In 4s, 5s. So we're not looking at 9s, 10s, or more, right? So isn't this one of the best times if you have the money and you go through all that qualification? This is a great time to buy.
I would say this is probably the best time to buy a home, and it's been in the last 10 or 15 years easy,
Right.
Paul. And
Yes.
we have plenty of money here to lend at TD. I mean, we have grown the bank through the midst of this recession. And we're quite proud to be able to say to our customers and shareholders that we've been able to do that, which means, from our perspective, we've been there through the difficult times. We're going to be there in the better times, and we're going to be there when everything is back to where it should be over the course of the long haul. So we're really confident in our brand and our value proposition for our customers, and we're quite pleased to be able to provide that opportunity when asked for it.
And I think, though, also banks, are also being careful. It's great to hear that, you have monies to lend. But I imagine that the banks, just because of, our past, concerns of foreclosures and this and that, and people getting money when, in essence, they couldn't actually pay it back, things like that, those kind of fears. What do you think in that regard, Mike?
Well, I think that, the housing bubble was caused by a number of different things, Paul. I think that it had an awful lot to do with, poor credit standards, number one. Number two, what I'll call irrational exuberance around values. And most importantly, I think products in the mortgage industry that did not do what we would refer to at TD as the basics. When you're going to lend someone money, you need to validate their income, and you need to validate their assets so that you can determine their ability to repay. Fortunately for us, we have a customer-friendly, conservative risk appetite, which gives us an opportunity to grow in difficult times and take advantage of opportunities when times are good. And we did not have the foreclosure experience that our competition is having to go through and continues to struggle with, because we just didn't go out on that risk curve like they did, number one. Number two, it just specific to our basic tenets and brand promise of being America's most convenient bank. We're responsible to be not just convenient, but protective of the shareholder value that we expect to deliver for our shareholders and our customers. So we feel very, very good about what we've been able to accomplish. And for us, it's all about maintaining our discipline. And we have great products at fair prices, and we have a convenience factor from a service perspective that we hope attracts more customers to the bank for all those reasons, and it gives us an opportunity to continue to grow.
Well, also, talking about first time, I remember when I bought my first home, I bought a co-op here in New York 26 years ago. Yeah. Of course, that's my number one asset in my life right now, 26 years. I bought it for 70. And with a backyard, the whole thing, and not such a good street. And now, it's worth, Upper West Side, worth a lot of money. And,
right.
I remember I was a little nervous. How am I going to pay this? But the fact is, we pay rent. I mean, you have to live somewhere, right? And rental is in most cases not such a little bit of money as is, right? So for maybe just a little bit more, you're building something for yourself, your family, and your future family. It's a great thing to do.
Yeah, I think it is. I mean, again, everyone's individual circumstances are different, but just to kind of take advantage of your situation, Paul, you strive for long-term equity position. You have that now, where others might not be able to be in a position to buy today. Perhaps that's because of a credit rating or whatever it may be. But the important thing to know is things can get better, and people can take steps to repair their credit. And it might take 6 months to a year, maybe even a little longer than that. But if they get the right education and they go see the right people and put them on a path to repair their credit, renters can certainly be eligible to be mortgage holders and homeowners over time, and that's a distinct opportunity for the rental population today as well. So it can happen.
Mm-hmm. I agree with you big time here, Michael. And with regard to credit and repairing your credit, because I had a couple things on my credit that weren't really fully accurate. And I can't say it was so easy to get them off. However, I did get them off. and got letters from that I did pay that bill, or it was a mistake, or whatever it was. But that carries you on for the rest of your life. That credit rating, everybody should look at the credit rating, whether they're buying or not buying. They should really know and see what's going on in their life, because, as you say, a lot depends on it, right?
Yeah, I would agree with you wholeheartedly, Paul. That to me is the ABC basics of understanding what your financial opportunities are going to be, because your credit rating does indeed drive pretty much your what you're going to be eligible to do.
Mm-hmm. Well, we got a lot of good information. There's a nice website, easy to navigate, a lot of good information here. The kit, you can get that free kit. What do they need to sign up here? Start the process now, okay.
Yeah, you can get it right off of the site, Paul, or you can certainly walk into any one of our stores, and they're certainly available there as well.
Bring your change with you. Last question. What's good? I did about a half an hour with my granddaughter up in Roslyn with the change, putting it in, putting it out. Now, what's good news for you, Mike?
Well, good news for us is that we have been able, I think I said this earlier, but good news for us is we've been able to serve our customers' lending needs since the onset of this recession without a hitch. We have plenty of money to lend. We believe we have a great proposition for our customers and prospects from Maine to Florida. We've been able to stay out of the way of all the problems in the U.S. housing industry, and we're quite proud of that. And we're really, really very proud to be called America's most convenient bank, and we believe we live up to it every day.
There you go. All right, and it's a man with 30 years banking experience. Mike, thanks so much for sharing good news with us.
You bet, Paul. Thanks for having me.
Okay, bye-bye.
Bye-bye.